always been quite critical of all of the, the money printing that's going on. And, as somebody who is trained in a traditional kind of Western business capitalistic framework, when you enter the space in 2008 and every single bank is getting a government bailout.
Arthur Hayes believes Bitcoin could surge over 50x, and he says the bullish market is only just beginning. His macro view? A perfect storm of Trump's coming money printing spree, the rise of stablecoins, and what he calls America's allergy to losing control of money. What if the US government could sidestep the Federal Reserve, weaponize stablecoins, and command trillions of dollars worldwide with a single move? That's the chilling scenario Hayes lays out, and it could change money forever. Before we dive deeper, smash that like button, drop your thoughts in the comments, and hit subscribe, because this is one prediction you can't afford to miss. Hayes begins with the Eurodollar market, a $10 to $13 trillion offshore dollar system, completely outside Fed control. For decades, whenever foreign banks got in trouble, the Fed bailed them out. But what if Washington suddenly said, no more bailouts? Like, if your dollars aren't inside America, they're not safe. In that instant, trillions would flood into stablecoins, fully backed by US treasuries or deposits. Power shifts from the Fed to Washington, and it gets bigger. Imagine Elon Musk and Mark Zuckerberg turning X, WhatsApp, and Instagram into global banks, handing out digital dollars to billions. Regulators abroad may resist, but US sanctions would silence them. Hayes says this could drive $20–25 trillion into stablecoins, neutering the Fed. But when people realize stablecoins are just another arm of US control, they'll seek the only true escape, Bitcoin. Do you think Hayes is right? Is Bitcoin about to 50x? Comment below, smash like, and don't forget to subscribe for daily crypto insights. Because when the stablecoin wars begin, which side will you be on? Now let's get into more insights from Arthur Hayes.
When I read the white paper about Bitcoin, it sort of aligned with me philosophically back in 2013. I started trading it. I saw how immature the markets were. I saw that my value add was trading derivatives, and sort of started BitMEX, sort of trying to build up that space. And then as I got more into more of the, buying and holding, because, obviously I have a business that does trading and whatnot, my main thesis, and this is basically all that I write about, is money printing, right? And the different ways in which the authorities around the world try to hide it from people and try to gaslight you about why it's not happening, and trying to make it seem like it's okay that a house costs 75% of your disposable income, and all these sorts of things all around the world. And so I think it's a global phenomenon. Unless you're extremely wealthy, you feel the effects of this inflation that every single government, regardless of whether they're completely communist on one side or capitalist on the other, everybody does the same thing. We're all in this sort of fiat debasement boat together. And Bitcoin has been this shining light, which has been the best performing asset in human history since it launched in 2009. And so I think that this has been a great ride, and obviously it's still early, for people to get involved in this industry. I wouldn't say that just because you're coming in at 2025 and Bitcoin's at 120,000 or whatever it is, that you've missed the boat. We still have a long way to go. No, I'm still pretty much fully invested, just because, again, I don't have a monthly P&L target to make or a yearly P&L target to make. I don't want to overtrade. Obviously, everyone falls victim to that of sometime trying to take 5 or 10% off the markets. I'm going to buy back in, But you just end up paying more fees to your brokers, and I'm just going to sit pat. And Powell comes out and says I'm not raising, or doesn't talk about cuts at all, and market tanks 15–20%. I've got some extra cash, and I'll be going shopping on some things that I think are cheap, just because I think that Trump and Besson are just setting up such a perfect situation for how money is going to be printed post 2026 in May. And I guess listen to a CNBC interview with Zarvos, one of the Fed chair hopefuls, and if that guy gets in, Bitcoin will be at 15 million, because he's just going to do yield curve control, printing money, immediate 300 basis point cuts, all sorts of things. So I think Trump and Besson have laid out exactly what they want to do: run it hot, inflationary, all these sorts of things. Powell is the only thing standing in their way, and come hell or high water, Trump will get what he wants. The question is, how difficult is it? Whether he has to fire Powell, or there's just ways to do it.
So then we have the Genius Act, right? That gets passed, and like Bessent was out there today saying how he's going to, this is going to be the greatest thing ever. We're going to export the dollar even more. We're going to have everyone around the world buying treasuries. It sounds like your thesis. Like, how do you think about that? I mean, what's going to be the impact of the Genius build, and how long is it going to take? Are we just going to see an absolute proliferation in stablecoins, and then how's that going to impact macro? Because my personal belief is that stablecoins are an incredible store of value if you're in the developing world. They don't want Bitcoin, they want dollars, but they want yielding dollars. So they're going to end up going into DeFi, and they're going to try to regenerate that yield. And then all of a sudden they're going to be like, well, I'll just have an agent do it for me. But my thesis is that we're going to see the dollarization of the world. Am I on the right track? How do you think about the impact, the near term and the longer term impact on the Genius build? And of course, like Beston's saying, I'm going to just issue these things to keep short term treasury yields down.
Yeah. So, I mean, I'm actually writing an essay, not specifically on the Genius Act, but on sort of a stablecoin thesis right now. And I'll be presenting this in Japan, and I'll publish it afterwards next Monday. And so I think essentially there's two pools, and you mentioned one of them, sort of these foreign retail deposits. There's two pools of money, which I think best via monetary policy and aggressive use of terrorizing sanctions can make people on board in the stable coins. The first is the euro-dollar market, right? So, 1950s and 60s, euro-dollar market was created because of all the regulations and prohibitions around interest payments and trade flows that the U.S. Monetary authorities were putting on commercial banks. And so you had these foreign branches of U.S. banks and foreign banks saying, hey, I'll take your dollars outside of U.S. control. And so we have this $10 to $13 trillion market, which nobody has any control over. Oftentimes influences Fed and Treasury policy in terms of when dollars become expensive and cheap in the euro-dollar market. And you can probably trace almost every financial crisis outside of the United States to euro-dollar market flows. And these flows are not doing what Bessent wants them to do. He can't control them. He doesn't know where they are. And he can't make them buy what he wants, which is Treasury bills. So my idea, and maybe he'll do this or maybe he won't, I don't know, is right now, why do you feel comfortable in a euro dollar? Because every time your banking institution has gotten into trouble, the Fed or the Treasury bails you out, even if technically they shouldn't be doing it so, because you're not a member of the discount window, don't follow U.S. regulations. But we can point to many even 2008, the Fed secretly bailed out all these foreign branches of banks for all their bad trading policies to make sure the euro dollar depositor was sweet. So the first thing Bessent should do is say, hey, guess what? If you don't have your money in a U.S. branch of a bank or a U.S. bank inside of America, you do not have a guarantee any longer. We will not come and save you anymore. So all of a sudden these dollars like, oh, okay, well, there isn't this blanket government guarantee from the Fed and the Treasury for these trillions of dollars that I have deposited on these banks. But I could put my money into a stable coin. And a stable coin means that the dollars are either a deposit at a U.S. branch of a bank in America, or they're holding Treasury bills. So if you don't feel safe in your Deutsche Bank account in Switzerland or wherever, just talk to your authorized participant and move these deposits over to a stable coin. And now you have access to your dollars. You have the blanket guarantee of the U.S. government. And guess what? You might earn a bit of a yield on your money, because you probably don't get much of a yield in a euro dollar deposit outside of America, because the banks don't actually need your money and they have to pay capital charges because of Basel III and blah, 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 right? All the bad things about why banks don't like large deposits. And so now you have, a $10 to $13 trillion TAM of money that could flow into stable coins from abroad. And once you're in a stable coin, Bessent has full control. He knows where you are, which bank. He knows where you're clearing your treasuries. And the best part is he can offer you a yield that's lower than Fed funds. So if Fed funds is 4.5, he can say, oh, guess what? I'll give you 2 on a 6-month T-bill. And you say, well, I can't really do anything about that because I'm not going to go into a U.S. bank deposit. The banks don't even pay you anywhere close to Fed funds. So Bessent can, in one fell stroke, completely neuter the Fed. And no longer does the Fed have any control over Fed funds, because Bessent can offer the Treasury bill at whatever price he wants, unconstrained by what Powell or whoever his successor does. So that's the first pillar. And the second is what you mentioned, right? You have a lot of retail around the world, in developed and developing countries. I live in Asia, and basically the entire investment game out here in Asia is how do we get local currency into dollars so that they can buy higher yielding assets and equities. That's literally all of finance in Asia. And then every so often the regulators come after people and they basically put the young guy in jail, and the boss stays sweet, as they do. And that is the game. So Bessa could say, okay, guess what? We're going to deputize Elon Musk and Mark Zuckerberg and give them protection to go and offer a stablecoin bank account through their WhatsApp, your Instagram, your X account. And we don't care if a foreign regulator, whether banking or internet regulator, says, we don't like this. We don't like that you're basically giving a dollar bank account to our entire, underclass or anyone who's not a wealthy individual. And, they don't care because they're sitting in Hawaii and Austin, Texas, and Trump is protecting them. And if you go and you try to remove access to Facebook or X, guess what? Sanctions, just like what Trump threatened with Europe when they had their Digital Information Act or whatever it is. And then furthermore, Bessent finally has a sanctions weapon, right? So if you're in Asia or a lot of developing world, all the elites essentially steal from their people and put their money in US banks in some way, shape, or form. And so guess what, president or prime minister or parliamentarian, if you don't allow Western social media companies to bank all of your people with dollars, I'm going to sanction you and you're going to lose access to the billions of dollars that you stole from your people. And so guess what's going to happen? Nothing. And so I think that is how you're going to get, sort of like $20-25 trillion TAM of money that could flow into dollar stablecoins. And I think they're hinting at this already in terms of, you have the major social media companies saying, oh, we're investigating stablecoins and this, that, and the other thing. And, Bessent's very pro on them. And then basically what does a stablecoin do? They're going to buy treasury bills and they'll buy it at whatever yield Bessent offers. He can completely destroy the Fed. He can put, short-term rates wherever he wants it. And now he's got a sink of tens of trillions of dollars that he can essentially fund the US government with until they do some sort of yield curve control to bring down the long end. So I think that's what I would do if I was Bessent. Now, I think they're on the path. Whether or not they get there, who knows?
That's a wrap on today's video. But here's the big question. What do you think about Arthur Hayes' bold Bitcoin prediction? Could we really see Bitcoin skyrocket to $15 million if the stars align? Trump's economic policies, Scott Bessent's strategy, and the unstoppable money printer all converging at once. It sounds insane on the surface, but every cycle has moments that once felt impossible. Remember when 100K Bitcoin sounded like fantasy? Now we're hearing whispers of a future where runaway inflation, global debt spirals, and endless stimulus push Bitcoin into territory no one dares to imagine, except bold thinkers like Hayes. But here's where I want to hear from you. Will the money printer fuel the ultimate bull market, or are these predictions just too wild to take seriously? Could Bitcoin actually become the safe haven as traditional systems buckle under pressure? Drop your thoughts in the comments. I'll be reading and responding because I want to know how you see this playing out. And if today's breakdown gave you something to think about, hit that like button and share this video with someone who needs to hear it. Thanks for spending your time with me today. Stay sharp, stay curious, and keep stacking those sats. I'll catch you in the next one.